joining us on this earning call for the quarter ended 30th September 2018. One of the big highlights of the quarter for the Indian telecom industry was the approval granted by the Union Cabinet to the National Digital Communication Policy 2018. This, as you would have noted, is a forward-looking policy which provides a good roadmap for the next level of growth and development of Indian telecommunications sector. For companies engaged in telecom infrastructure, the policy has a number of positive developments, such as enhanced scope of IP1s to offer active infrastructure, according telecom infrastructure the status of critical and essential infrastructure at par with what is given to the electronic telecom infrastructure, facilitating fiber to the tower program to enable connecting at least 60% telecom towers on fiber and promoting collaborative models for provision of shared duct infrastructure. These will further incentivize industry participants to share infrastructure and help us transition from largely a towerco to a broad-based telecom infrastructure provider. The government's commitment to 5G, as mentioned in NDCP and at various international forums, these developments augur very well for infrastructure providers like us. A key development for the company, as given in the press release this quarter, has been that subsequent to the completion of Vodafone Idea merger, both Infratel and Industars have now received exit notices which have resulted in exits of approximately 28,000 co-locations on a consolidated basis for Infratel and approximately 55,000 overall. Now this very clearly puts this uncertainty behind us. Now while the exact details are being worked out, on a consolidated basis, the exit penalties from the ongoing operators should be in the vicinity of about 1,500 crores, which they would endeavor to settle in a combination of cash, which should be a significant portion, and the balance by way of committed future revenues under a combination of either new co-location commitments in the next 9 to 12 months or extension of contracts by another 5 years. We hope to finalize these and close before the end of the current quarter. With other operators who had exited earlier, we are pursuing the matters legally. As I mentioned, the uncertainty on exits now has been laid to rest. With big consolidation in the sector behind us, the stage is now set for rapid rollout of 4G. For instance, you would have noted media reports of Vodafone Idea getting ready to place large orders on equipment vendors. And the government has also indicated that the spectrum auction for 5G could take place in 2019-20. Introduction of 5G would further enhance demand for new sites, which would be in very large numbers due to higher bands of spectrum for 5G. The merger process with Industars is proceeding satisfactorily. We have already got permission from CCI and SEBI and have filed the first motion petition before NCLT. We do hope to close this by around March 2019. Coming to operational parameters, the consolidated tower base on 30th September stood at 92,123, with co-locations declining by 20.7% year-on-year, with a factor of 1.89 as closing. Against the backdrop of this massive 21% drop in co-locations, our financial performance has been quite robust. For instance, consolidated revenue, service revenue, declined only by 6% year-on-year. EBITDA by 8%, EBIT declined by 9%, and net profit declined only by 6% year-on-year at 6 billion rupees. The ROCA pre-tax and ROE post-tax remain healthy at approximately 34% and 16% respectively. The board yesterday declared an interim dividend of 7.50 rupee per share for the financial year 18-19. To conclude, we remain optimistic on the tower industry and the demand in future. We believe the structure in the industry is now right. Network densification is the need of the hour, and as the operators focus on delivering high speed and high quality 4G services across the country, we believe the demand both for ground structure and for further demand coming by way of 5G by 2020 will make the overall demand a robust proposition. This will, of course, entail big additional investments, which will necessitate collaboration and sharing, which is the backbone of our business model. With the uncertainty about loss of co-location behind us, we are looking to some robust and strong growth henceforth. Before I hand the call back to the moderator and open the floor for questions, I would like to introduce S. Balasubramaniam, popularly known as Bala, who has recently taken over as CFO from Pankaj Miglani. Thank you.
Thank you very much, sir. We will now begin the question and answer interactive session for all the participants who are connected to the audio conference service from Airtel. Due to time constraints, we would request if you could limit the number of questions to 2 to enable more participation. Hence, management will take only 2 questions per participant to ensure maximum participation. Participants who wish to ask questions may please press star 1 on their touchtone enabled telephone keypad. On pressing star 1, participants will get a chance to present their questions on a first in-line basis. To ask a question, participants may please press star 1 now. The first question comes from Mr. Sachin Salgaonkar from Bank of America, Mumbai. Mr. Salgaonkar, you may ask your question now.
Hi, thank you for the opportunity. My 2 questions are, number 1, Akhil just wanted to understand the timing of when this 1,500 crores could hit P&L in terms of revenue. And will all that impact generally flow to EBITDA, or there is a bit of a, room out there in terms of cost control? Second question, clearly we are seeing data on the ground picking up, and clearly with data, the fiber needs also rises. But we are not seeing major sharing in terms of fiber. Any thoughts on just the way you guys created an Investors and Infratel structure of creating a sort of a similar entity at a fiber level?
So Sachin, Rawat this side, let me try and take this. In terms of 1,500 crores, firstly, the revenue recognition principle that we've set in the past for all exits is basis actual payment. We are also looking at seeing if there is part adjustment towards cash and part adjustments towards future business, as Akhil mentioned. And if that was to happen, obviously this will get straight lined over a period of time and should get recognized as additional revenue and as additional business as and when that gets settled. From a timing of settlement, we are hoping that we have the settlement before we come back for the next result announcement. So we will have more concrete details then on how exactly and what is exactly signed with the operators there. On your second question of data picking up and fiber, we have, as Investors and Infratel, definitely created smart cities where we are looking at interest from various government authorities and also private operators. On sharing of fiber assets, this is in the operator domain right now, and they are competing with each other and looking at wherever bilateral kind of sharing. So what tower was way back in 2006 and 7, we see fiber at about the same stage, and there are some bilateral arrangements of sharing, but on a very selective basis between the operators. Will this take up? Yes, going forward there will be. And we also understand that large operators are in the process of hiving off their fiber assets so that they can monetize or create models like Indus.
Thanks, yes, this is helpful. One small follow-up question is, this idea Vodafone exits, I mean, are these largely behind us, or, we could hear about more exits in next 12 months or, at some point in the future?
So, for us, large part of it is already done in terms of exits that were supposed to come between Voda and Idea and both Indus and Infratel.
Sorry, large part in the sense there is a small part which may come later.
There are permitted exits that are part of the contracts with operators as and when they optimize their networks. Minus that, as I said, on account of merger, the large part that was supposed to happen is already done. And we think with this, pretty much all the consolidation related to merger or with operators exiting is all played out in the numbers now.
Okay, got it. Thank you.
Thank you very much, Mr. Salgaonkar. The next question comes from Mr. Manish Adukia from Goldman Sachs, Mumbai. Mr. Adukia, you may ask your question now.
Yes, hi. Good afternoon, and thank you for taking my question. I have two questions. Firstly, if you can just talk about the gross tenancy addition trends. When do you expect that to start picking up? Do you expect Vodafone Idea to contribute to that number at all going forward? And what about the behavior from other customers like Bharti and Jio? And when does the loading phase, in your view, end and new tenancies start coming in? That's my first question. And second question is similar to the first question that I asked earlier. Any meaningful role that Bharti Infratel is playing or can potentially play for small cell deployment in urban parts of the country? And could that be a viable sharing model in your view? Thank you.
Thanks, Manish. On gross additions that we are seeing, if you looked at the numbers, there is a little bit of uptake on new towers being built out. There are a few towers also being built under USO by operators. You're also aware of Jio having plans of rolling out aggressively as they move forward. So we do expect things to pick up. In terms of your question of saying how and when, what Idea will do, that's specific to them. They are going through a merger process. We are seeing accelerated pace of 4G deployment as cabinet expansion in our schools. And increasingly that number for the leading operator is tending more towards the 90% of the sites. For the operators that are trailing, we see them doing a catch-up too on account of the big growth that we are seeing on broadband customers and their usage too. And these numbers, you can see that there is a small bit of increase, and we think from here on it will accelerate. The fact that Jio wants to do, close to about 300,000 sites is known. Service quality improvement is a focus area. Now that most of the consolidation is played out, their major, customer gaining strategy would be around service differentiation, and for which they will have to add higher number of sites once they have done 4G on their entire existing sites. So we think this will help us gain larger share given our largest footprint that we have between Indus and Infratel across the country. On Voda Idea, as I said, post their racialization, and Akhil did mention there are media newses which are talking about their vendor finalization. We do expect once that is done, the merged entity will start to roll out and do the catch-up to stay as number one in areas where they have not rolled out so far. On your question of small cell, we have already deployed both in Indus and Infratel various types of small cells, including on poles, on metro railway tracks, and so on and so forth that you might be able to see in metros, primarily towards creating a shared model. We believe there is a sharing model available for small cell where the ground rental sharing itself could mean meaningful part for the operators, but that is subject to two critical areas. One is availability of power, and second is fiber. We think that will play a catalyst role in terms of accelerating small cell deployments in this country. We are working closely with operators, and Smart City is a great opportunity to showcase some of these products where we are using street furniture to provide better coverage to the citizens. We think these shared models of small cell will be the way to go in country like India where there is so much of price sensitivity to the end customer and the tariffs are so low. And we think this is a scalable model, more in preparation of 5G, more than 4G today. We still think there is macro growth to come on 4G, and before 5G comes in, small cell will be there as stable product and will cater for the large numbers that 5G is envisaging to cover in those high-frequency bands.
Great. Thanks so much, DS, for your detailed response. Just a couple of quick follow-ups. So I think in the past you've mentioned that once operators reach or fill the existing towers with loading, they would come out with new tenancies. So are you saying that, now operators have reached that stage where loading is largely done, so new tenancies should start coming in? And second follow-up question is on Jio. When you mentioned, are you still seeing incremental tenancies from them or tenancies in a meaningful manner from them, because they have in the past continued to mention that they are building their own towers, but are you seeing them deploy with you also in an aggressive manner?
So as I mentioned earlier, we are seeing leading operators in their leading circle to reach those high 90% in terms of 4G deployment on their existing sites, heading towards that 100% on all existing sites. Once that is done, we do expect them to start adding sites, and I did mention we are seeing a small uptick in the new site build-out, which was pretty dormant for some time. We expect this to pick up from here on for the trailing operators. And when I say trailing in the particular circle, because the 1, 2, 3 position changes there is still a huge amount of headroom in terms of 4G deployment, given that they have not fully deployed all the spectrum bands that they have won for 4G. So we are seeing that still continue. We are in fact seeing still an accelerated pace of 4G base station deployment on existing sites by all the operators. Your question on specific on Jio. Jio traditionally has built sites on their own. It's a known thing that they declared. Whatever sites they are offering for sharing, we think we continue to gain on our market share on whatever is offered for sharing, and we continue to focus on whatever is coming in as sharing numbers from Jio 2.
Sure. Thank you so much, and all the best.
Thank you very much, Mr. Adukia. The next question comes from Mr. Kunal Vora from BNP Paribas, Mumbai. Mr. Vora, you may ask your question now.
Yeah, thanks for the opportunity, sir. First question, have you received any exit penalties in the first half? Like say Tata Telenor, at least like, while Vodafone Idea you might still be in talks with, but for the earlier ones, whether you received something. And second is, why would you settle for new business or extension of contract in lieu of exit penalty? Why not just insist on cash? That's first question, if you can. And second one, I also wanted to understand, with rising diesel costs, would the pace of green initiatives, electrification of towers increase? And in your energy cost, what will be the contribution of diesel versus electricity? That's it.
On the first one, very clearly, we are in the business of helping our customers grow business. And therefore, from our point of view, if we can get committed business for future, that's always a much better proposition than getting some lump sum cash in one go. It doesn't serve our business interest. But yeah, certainly there will be a combination of the two. And we are very happy making sure that there is more business coming to us. On Tata, I think it's a small amount which is being finalized.
On your question on green initiatives and on energy cost, the split is very different depending on where you're looking at. Metros, obviously, the grid electricity is better and hence the diesel consumption is low. Rural parts, again, when you go in, the grid availability is poor and hence vice versa. There is a continuous focus on the company side to make sure that on the basis we reduce diesel every year, and those projects are going on track, both in terms of our green sites that we are trying to build in, diesel-free sites, and in fact some of the small cell and new products that we are creating are sites without diesel generator itself. And hence we'll try and continue on that journey of making sure that we're reducing overall diesel consumption in the network. Given the current improvement initiatives that the government of India has also taken, that will also help in making sure that we accelerate the pace of green deployment in our circles.
Sure. So would the energy cost on your towers be very different compared to what Jio might be spending on its towers? Would you be able to comment on that?
It's difficult because these data are not in the public domain too, but in the circles that we operate for a given load, Energy cost is a function of load that is there and the grid availability in that particular area. And if they are operating on a similar area, we do not expect these to be significantly different too.
Yeah, they can't be significantly different. But it depends. If something is in a big city versus a remote area, naturally the cost will be different.
Sure. And lastly, in your revenue base currently, what will be the contribution of loading? Would you be able to quantify that?
Sorry, we haven't given that in the public domain yet, so I'll not be able to comment on that, Kunal.
Sure. Okay, fine. Thank you. That's it from my side.
Thank you very much, Mr. Vora. The next question comes from Mr. Srinivas Rao from Deutsche Bank, Singapore. Mr. Rao, you may ask your question now.
Hi. Thank you very much, Akhil and DS. Two questions. First is, if I look at the impact for Infratel on a standalone basis and Indus, separating it out, the impact seems to be much larger for Indus. They seem to have lost approximately 20% of their tenancies, whereas Indus has been almost approximately 10%. Again, this is based on your disclosures. And also, it seems that Indus has seen an increase in the sharing revenue, which is what you would expect, but Infratel on a standalone basis has also. Just trying to understand why is there the divergence in these trends. That would be my first question. Second, Akhil, in your opening remarks, you mentioned something about targeting the critical infrastructure level and that helping the fiber. Can you again? And the IP1 license being changed. Can you just elaborate on that? That will be really helpful. Thanks.
So let me take up the second one first. I think what the National Digital Communication Policy says is that in context of safety of the infrastructure created, they will treat it as essential infrastructure, which is a big thing for us. Because what happens with that is, if that comes through, that all this threat of sabotage and of, anybody coming and saying, shut this site, that goes. The sudden closures of sites cannot be done. So it's more with respect to safety rather than any financial incentive.
Understood.
On your first question, I did not get the exact question there in terms of sharing revenue trends on a per tenant basis. I don't see divergent trends on the numbers unless we are seeing some of the number there.
No, I saw you disclose Bharti Infratel standalone towers and co-location, and then you give Indus numbers also. So if I look at for the quarter, on a standalone basis, Infratel's sharing revenue per tower per month, that number has gone down from 84,000 to 82.
In both it has gone down.
That is per tower you're referring. It's gone down on both. If your question is it's more in Indus versus Infratel, that is because Voda Idea had a right of first refusal in Indus, and that's why you could see a small amount. So the trend is not divergent, it's alike. It's just that the impact is slightly higher in Indus than in Infratel.
So more or less on the same lines.
Yes.
And the loss of tenancies being relatively higher for Indus, is that also
true? And hence the number.
Okay. Fair enough. Thanks. I'll come back for more questions. Thanks.
Thank you very much, Mr. Rao. The next question comes from Mr. Vivekanand Subbaraman from Ambit Capital, Mumbai. Mr. Subbaraman, you may ask your question now.
Hi, thank you very much for the opportunity. The first question is on your core operating margins on rental revenue, excluding energy. That didn't decline much, and it stood at 65% despite the revenue and tenancy drop. What were the key factors resulting in margins remaining firm, and where should we look at these margins going ahead? Secondly, on fiberization, you mentioned that this is a great opportunity for you, and you see that operators are now more amenable to sharing fiber. But as the quarters roll by, Airtel, Jio, they seem to be very aggressive in rolling out fiber. Won't it get more and more difficult to hive off fiber assets, given that in several large urban centers where there is high demand, fiber rollouts will be aggressive? And lastly, did you quantify the exit penalties that you expect to receive in total? Thanks.
So first, your first question on core margins, yes, there's been some, operational initiatives where we've managed to reduce the cost a little bit. And also, if you look at Voda Idea numbers, there is a 1 month impact that is there as part of the 3 months that you see there. There is some residual impact that is likely to come incrementally as you move to the next quarter, and thereon that will become the new normal there. However, as I said, on operational front, there have been some initiatives which have also yielded some positive results. As you can see on the cost line items there has been some reductions on both network side and also some stabilization on the personal cost there. We expect, on account of Voda Idea, we expect incrementally anywhere between 45 to 50 crores per month impact to come in the subsequent quarter.
Right. And actually on the operational front, you mentioned that some of these initiatives that you took are lasting. Have they also spilled over to the maintenance capex side? Because I'm noticing that maintenance capex has declined to 120 crore from an average of around 150 crore in the last few quarters.
Maintenance capex, firstly, you need to see that on a full year basis because there are some seasonal adjustments depending on which part of the country you're looking at. We do prepare for, wintry peaks in snow-clad areas and also, floods and other things in other areas. So I would suggest maintenance capex have a yearly view. There we're not seeing a significant change, but as grid electricity improves, we do expect, because a large part of maintenance capex is towards replacement of batteries and generators, we do expect to trend downwards in the longer run, but in the short run, we're not expecting that to change meaningfully there. In terms of initiatives, yes, some of them are sustainable, and that will become the new baseline too, but will they continue to yield you EBITDA margin improvements? As I said, as you get on to the levels that we've reached on, increasingly we expect these numbers to be more stable than actually yielding EBITDA margin improvements on the numbers that we've looked at. Your second question on fiberization, if I try and answer that, fiber requirement right now as we still see is pretty huge within the cities. More so, first is of course interconnecting the towers from the current ratios of 1 to 4 or 1 to 5 depending on operators that are connected on fiber. As you move to high spectrum availability to each operator, the only way you can aggregate traffic and take it back, given the large spectrum pools that are available with each operator, is through fiber. And we see higher deployments of fiber taking place in each of these areas. As you move to small cells and 5G, this requirement will only go up, and that's our belief. Within the cities, the requirement of fiber for FTTH kind of applications, both to the homes and also to interconnect the small cell size, which would come in millions in the long run, you will need fiber pretty much in every street that one could look at within the cities. And there we do see increasing deployments by incumbent operators as their traffic is growing. And sharing, as I said, we've seen mostly bilateral. No one doing, proactive building of fiber to sell to somebody, except in the case of Smart City that we built in Vadodara for Indus and NDMC in Delhi and also in Bhopal.
I think a very fair point is, at this point, we do not know how the operators would deal with the fiber, but we believe the fiber asset, like the towers, has got to come out and be shared on a non-discriminatory basis. As far as our company is concerned, we would definitely try to see that we can roll out fiber in connecting the tower as a last mile and in rolling out fiber in the smart city projects which we win in the tender.
Right. And lastly, on the exit penalties?
So what does they...
So, Akhil did
my
mention...
question was, did you quantify that?
On exit penalties, for the exits that we've seen, the exit penalty is close to 1,500 crores
consolidated
on a consolidated basis.
Right. Yes, thanks a lot.
Thank you very much, Mr. Subbaraman. The next question comes from Mr. Viral Shah from Credit Suisse, Mumbai. Mr. Shah, you may ask your question now.
Hi, good afternoon. This is Sunil Tirumalai from Credit Suisse. I have a couple of questions. Jio right now, out of the estimated 180 or 200,000 sites that they may be having, what is your estimate of their own sites versus what they have rented?
Hard estimate for me to make. We do have some information, but we don't give these information in respect of our customers.
Okay. Of the sites that they are building, are they all only monopoles with no intention to share, or do you think there is a threat that they could open up for sharing at some time?
Again, I think it is so inappropriate for us to tell you what they are thinking. I think it's best to ask them. Yes.
Okay. Thank you very much.
Thank you very much, Mr. Shah. The next question comes from Mr. Anirudh Gangahar from Nomura, Mumbai. Mr. Gangahar, you may ask your question now.
Thank you and good afternoon. The first question is that you mentioned rupees 1,500 crores is the typical exit penalties from ongoing operators. This would essentially be Voda Idea and everything related to do with Bharti, Tata and Telenor, I'm assuming. Would you have any such ballpark assessment of what would be the amount for the operators that have exited that you are in the process of recovering via the legal process? That's question one. Second question is on the energy charges and the reimbursements, the margins seem to be a lot higher on Infratel versus Indus. Any reason for that? And secondly, on this topic, is there a possibility that we could go through a pass-through system given that the telcos are not having the best of health at this point of time? Thank you.
So your first question is right. Your understanding is correct there of 1,500 crores being with the operators that we are pursuing exits on. Rest of the cases the matter is right now subject at various stages of legal recourses. Hence, I would not like to give that number away. Just to put that in perspective, these numbers are significantly smaller. We had said that in the past that our exposure to smaller operators was much lower than some of our competition, and hence these numbers also proportionately small. But we are not quantifying that at this stage because each of these are individual arbitrations that are in proceeding.
Yeah, and also looking at the status, the chances of recovery don't look too good. Right. And that's why we took a policy earlier on that these things we'll recognize only on actual receipt.
Your second question related to energy margin 2, category B and C circles, there is a different profile as compared to the metros and cities where there is better grid availability, and hence the opportunity to maximize grid is lower in some cases, and your ability to put other green initiatives is also lower. Some of this is also to do with additional batteries and additional capexes that have been incurred in these sites, and you do see that impact coming in. Also, some of the things that you expect an improvement of grid have all played out. And that's why you do see a difference there on energy margin. But again, this has to be again seen on a full year basis. There are places which get impacted in winters as against the summers. A full year impact would be a more fair assessment between Indus and Infratel. Your question of whether operators would like to move to pass-through, today operators have seen significant benefit on account of the fixed energy models that have been signed up with them, where there are savings, and all these initiatives that we are jointly taking has yielded good results for the operators and has also reduced the amount of effort and time required for reconciliation between both the parties. In order to continue to encourage tower companies to make investments towards diesel reduction, we believe this is the model to go forward and will only get improvised from this point on to become more load-oriented rather than base station-oriented as it is today, to go forward and become more indexed to the current grid price as against the grid versus diesel that is available today.
Right. Again, just one follow-up to the first question that was asked, that whatever termination charges we get, that would be a straight flow through the EBITDA level.
Well, our endeavor, which we are in discussions, is that whatever we get by way of cash, that also we would like to amortize over some period and not take it in the same month. But we are not too sure at this point as to what kind of accounting treatment would be allowed. But yes, to that extent it goes straight to the bottom line. There's no related expenditure to that.
Right, Akhil. So basically whatever we are going to get in cash, which you will have a better visibility on by the next quarter, that also may actually be recognized on an amortized basis, actually.
They would like to do that.
Right. Thank you very much for the answers.
Thank you very much, Mr. Gangahar. The next question comes from Mr. Sanjay Chawla from JM Financial Mumbai. Mr. Chawla, you may ask your question now.
Hello, good afternoon, and thank you for the opportunity. I have just one question. Can you comment on the amount of free reserves that you have on the balance sheet that you can potentially utilize to pay out a dividend more than the annual profit, or you could also do a share buyback?
Right now we can't do a share buyback because our merger scheme is in progress. But yeah, there is some fair amount. I don't have the figures.
So we have only, in terms of distribution, we have only a marginal, right? And we have by MLI exhausted the full amounts.
Sorry, I didn't get, you have some marginal amount?
Yeah.
Because we have been declaring most of the dividend, whatever profits we are.
Yeah, that's correct. Just, one question related to the Voda Idea impact. You say most of the tenancy exits are done. I mean, do you see any scope for further exits in the sense the overlapping one has already played out, but, ones which are not overlapping because they could have a lot of towers or tenancies which are nearby, being, two of the, major legacy operators. Do you see some impact potentially coming as a result of those non-overlapping but nearby tenancies?
The overlapping include, to our mind, all those towers.
So overlapping includes the nearby towers as well, where they both are not present on the... Oh, okay. Yeah. All right. Okay. Thank you. Thank you. All the best. Yeah. All right. Okay. Thank you.
Thank you very much, Mr. Chawla. Participants who wish to ask questions may please press star 1. The next question comes from Mr. Himanshu Shah from HDFC Securities Mumbai. Mr. Shah, you may ask your question now.
Sir, thanks for the opportunity. So just on exit penalty, the 1,500 crore number, that is for Infratel plus 42% of Indus. Right, sir? Or is it for Infratel plus 100% of Indus?
No, it's as you said, 42% of Indus.
Okay. So, sir, what would be the full number? Because we are going to merge with Indus, so Infratel plus Indus, if you can help to quantify.
I don't have the calculation there, but I think next time when we give the complete details, we'll talk about that.
Sure, sir. And sir, second question on the overlapping tenancy part, as Vodafone Idea probably starts removing their equipment, should we assume some more impact on the revenues on account of that? The 55 tenancies for Infratel plus 100% of Indus that they have exited. In case if they start removing equipment, there could be further impact. And have they already started doing that?
So as Akhil mentioned, there is, firstly, we do not expect anything beyond the numbers that have already come in. In terms of redeployment equipment, if paper article, where do we believe they are finalizing vendors for them to redeploy probably equipment within the circle or between circles. So we'll get to know once they have that plan announced to everybody.
But we do not expect their ability to remove too much of equipment because they will need large capacities, and therefore they will have to leave most of the equipment on the site as loadings.
Okay, fine. Thanks, sir. Thanks a lot. That's it from my side.
Thank you.
Thank you very much, Mr. Shah. We have a follow-up question from Mr. Srinivas Rao from Deutsche Bank, Singapore. Mr. Rao, You may ask your question now.
Yeah, hi. So just on the dividend, the interim dividend which you have paid, that's almost 1,400 crores, and then there will be a dividend tax on that. That still would mean you would still be accruing cash, right? Because your cash flows are ultimately running higher than that. Is that a fair comment?
Yeah, you can assume that.
So I mean, still by the end of the year, you will still, I mean, even if you pay your full, even if the payout ratio is 100, you will still be accruing cash for the year, right?
More or less equal.
Yeah.
And is there we haven't seen the NCLT filing in terms of is there any chance that your free reserves could increase post the merger? Does the merger, documentation, envisage free reserves getting created?
I don't know. Maybe we haven't looked at the post-merger accounting. I really won't.
We have not finalized post-merger we have not finalized the accounting, and it depends on how the accounting treatment of the merger will determine that. As of now, I don't think we have a view on that.
Srinivas, to your earlier question, if you'll go to page 23, if you look at the depreciation and amortization figures, they're pretty much in line with the capex figures, and therefore the cash flow is more or less the same as the net profit.
Understood. Thanks.
Thank you very much, Mr. Rao. At this moment, we do not have any further questions from participants. I would now hand over the call proceedings to Mr. D.S. Rawat for the final remarks.
Thank you. With Vodafone Idea merger, the negative impact due to operator consolidation is completely incorporated in our tower tenancy portfolio. Despite the consolidation impact, we closed the quarter with consolidated revenue of rupees 3,668 crores and EBITDA of rupees 1,506 crores, profit after tax of rupees 600 crores. With the worst behind us, we've started to see some increase on the new tower build-out, with 3 large and strong private operators competing for growth along with the government operator. We are seeing strong 4G cabinet expansion. With increasing focus on service quality, we expect the catch-up will also reflect in tenancy additions going forward. As Akhil cited, the new forward-looking NDCP with government's commitment towards Digital India augurs very well for infrastructure providers like us. With our pan-India coverage and strong operational performance, we believe that we are ready to capitalize on emerging opportunities of sharing on a non-discriminatory basis. On behalf of entire Bharti Infratel team, I thank you all for your continued support, and we wish you all the very happy Diwali. Thank you.